Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Hey, gang. Very, very pleased today to have our special guest, Darin Mangum, zooming in. Darin is a special guest. All of our guests are, but Darin's extra special because he helps real estate capital raisers stay out of jail. So Darin's been in the whole legal side of things for quite a number of years. He's been helping real estate investors do syndications, set up funds, and do them the right way. In fact, he's just come out with a book recently called Raising Capital with Confidence. Maybe the subhead should be "And Staying Out of Jail."
That's
so,
right.
Darin, welcome to the show. Great to have you.
Yeah, that's going to be the sequel, right? We'll just put that "Stay Out of Jail." I debated between that title and this one, but Raising Capital with Confidence is a little bit of a little more positive thing, right?
Yeah. Well, that's the idea. Raise it with confidence and confident that you're going to be doing it properly. So, Darin, maybe let's start with this. I mean, you've been around the block a number of times, raising capital, especially a few years ago. It was just like go, 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 especially with multifamily investors and whatnot. What were the kind of mistakes people were making that were making you just want to tear your hair out? Like, what were you seeing people doing and just going, oh my God, what are you thinking about?
Yeah, well, yeah, I talk about the 2008 financial crisis quite a bit because that was a crazy time where, people were just raising capital. I mean, really, you didn't have to. I mean, if you couldn't get a bank loan, something's wrong with you, number one. And then number two, of course, there was lots of real estate development projects, lending funds, just it's almost like nobody could lose, right? And when the wheels came off the bus, 2008, 2009, we saw just a bloodbath. Even clients who were doing it right, everybody was suing everybody, right? SEC was looking out, trying to find anybody, anybody they could suck blood out of. It was just a crazy time. And, clients that we had that did it properly, it wasn't fun, right? Because even though they had all their documents and all their legal put together, that didn't prevent a lawsuit. That didn't prevent SEC investigation, all your worst case scenarios, right? That we always, people say, well, why do we have to put all this language, this terrible language in the PPM,
Yeah.
I'm like, well, there's this time called 2008. Let me educate you a little bit. And, so a lot of those things came to pass, but I mean, the good news is the clients who did it properly, the worst case is they get to court and the judge, dismisses the case. It's like, look, we can't just wave a magic wand. SEC, turns everything over, sees all the paperwork. Okay, well, it's like getting pulled over by the cops, going, and they want to see all of your registration, license, and all that. And then, okay, well,
Even if they don't give you a ticket.
even though they don't give you a ticket, they want to see all that. And your best day is like, oh, well, they'll just say, hey, hey, be careful out there. We'll see you later, or, they may try to find some reason to give you a ticket to wait, justify their time. But, regulators are no different. And then obviously you've got, private parties who, some people are just more litigious than others. And so that's the whole purpose, obviously, of all the paperwork. I mean, a vast majority of our clients, everybody's making money. Nobody's looking at the paperwork. Everybody's happy. It's like with most legal paperwork, right? It's all the what ifs. I mean, we really, I mean, yeah, we sell legal services, but we really sell peace of mind. Just saying, okay, well, worst case scenario, I'm not going to go to jail, and I'm going to, if 2008 happens again, God forbid, I live to fight another day, dust myself off, and it's a lot of the same clients. They turned right around and set up a distressed mortgage buying funds that started buying some of these distressed assets at a bargain prices. So, I mean, we talk about real estate, obviously. People make money on when the market's going up, when it's going down, sideways, so many different opportunities. It's just, where do you want to play, right?
Okay, so yeah, that was 2008, 2009
Mhm.
bloodbath. That was a lot, especially in single family homes at that time.
Yeah,
Fast forward, well, not that many years, actually, 12, 14 years, 2022, 23, etc. Kind of a bloodbath in the multifamily space.
right.
What did you see kind of happening there, or what kind of mistakes did you see real estate folks making around that time?
Well, I think oftentimes it's that the biggest mistake I think is to just move fast and figure, try to I just, I mean, obviously nobody wants to spend money on legal if they don't have to. They've just moved too quickly without at least having, um, I don't care if you're just a securities lawyer, just any lawyer, right? Take a look at maybe the deal structure and maybe, they a lot of times they'll maybe load up too much on with either a joint venture agreement or they'll load up with promissory notes that
Mm.
um, are not, they haven't really run through a financial forecast. Everything, if everything, they kind of fall in love with those rosy numbers as opposed to trying to calculate, hey, what if these 1 year, 2 year, 3 year notes that don't have any extensions? What if the project takes a little longer? What if your occupancy rate is a little off, right? And
Mhm.
then all of a sudden, what ordinarily would be a great project is all of a sudden in trouble, right? And so that's the main thing I saw in that time during that time frame.
Okay. So these days, Darren, who makes up the majority of your clientele? Who do you guys serve the best?
Really, most of our clients are still real estate. I mean, doing different kinds of syndications. We're doing a lot of development deals, especially a lot. The AI boom is really driving a lot of land speculation, a lot of real
Mm.
estate projects, and obviously in areas like Texas and other places where you're seeing an AI boom, that's obviously you know and bringing property values up and all that. So we still do just again we do real estate. Multifamily type funds, acquisition funds, but a lot of land development as well. And especially when banks are still not being very liberal with their capital, the private equity markets they're there to fill in the gap, right? So
Right.
we're seeing a lot of whether it's investors taking a second or third lien positions or just taking straight equity for the long run. That's kind of our bread and butter. Doing those every day, all day long. I've been doing, been practicing now for over 26 years and, different sectors, like oil and gas comes and goes. AI is really hot, obviously, right now, but real estate is just always there,
That's the bread and butter. Yeah.
Yeah, yeah.
So when you're working with your clients, especially let's say a newer client that's kind of hasn't got a ton of experience raising capital, what kind of guardrails do you give them or suggestions do you give them when it comes to talking with potential investors, getting people to wire funds, these kind of things? What are some of the mistakes people tend to make that you work really hard to help them avoid?
Yeah, I think jumping the gun on advertising on social media seems to be probably the biggest one, right?
Mhm.
And also through their website. A solicitation. When we say general solicitation or public advertising for securities, really any public facing offer or opportunity, even if it's just, hey, call me for more information about our opportunity, right? That's technically could be viewed by a regulator as an offering of securities. And so, just some, I mean, I always go straight to the website, even before we get all the legal paperwork done. Um, I just go right to, okay, give me your website, give me your social media handles. And, 9 times out of 10, I'm like, okay, well, we need to fix this. And it's hard to kind of, I mean, you want to definitely get out there, but, just with some simple disclaimers or just some really easy to implement, firewalls, registration, not putting all of your opportunities right in front and center on a website is very easy to do. Plus you want to, from a marketing standpoint, I think you definitely want to keep that capture that information, right? I mean, you don't just want to put all of your opportunity and your documents and all your deal terms out there for anybody to see.
Right.
You want to capture that information, do basic things like, hey, are you an accredited investor? Things of that nature, right? It really depends on obviously the types of investors you're wanting to attract. And obviously we can get into, a lot. I mean, I can go as deep into the weeds as you want to go onto the different regulations that apply both in the US, Canada, and worldwide as far as what you want to have on your website, what you want to avoid having on your website, and things like that, right? So I think, to answer your question, I mean, that's really the biggest thing is because obviously you want to get the word out there, but you don't want to, you just need to have somebody taking a look at it that knows what they're doing before you just blast it out to the world, right? So
Yeah, definitely. So I guess generally speaking, if somebody's a syndicator or a fund manager or whatnot, and they're looking for accredited investors,
right.
what kind of disclaimer or wording would you recommend without going too deep in the weeds, but just big broad strokes, would you recommend they have on their website?
Yeah, 3 words. Oh, 4 words. For accredited investors only. Okay. So
That covers a lot. Yeah, that's good.
that alone, just if you don't know anything else, I mean, you don't talk to, I mean, just slap that on your website or any sort of public advertisement for accredited investors only. Okay. Because there are exemptions that are like, say, Regulation D,
Yeah.
Rule 506C that allow you to publicly advertise to, as long as you say, hey, this is for accredited investors only. You can, as long as it's true, obviously, you can really you can say just about anything, put it out on any kind of medium, Facebook, social media, website, and again, it's there's lots of exemptions that cover just for accredited investors only, but obviously, if you're trying to keep it under what we call a private placement exemption like 506B Bravo, then in that case, you don't want to really put anything out there that could be construed to be an offer, right? Like, hey,
Right.
call me to be an investor, or, you just want to have, in those cases, you just want to, it's okay to talk about what you do. You just can't take that last step and ask them, hey,
To reach out to
you
you.
can show what everything you're doing, build that credibility, but you can't say, hey, if you want this kind of return, call me. Or you can't say, which is kind of hard to do sometimes because you want to put a
Yeah.
contact information, you want a lead funnel, those sorts of things, right? So there's ways to go about, like an example, like a 506B, if it's a private placement, I always recommend doing what we call a two-step approach, right? Where you advertise something other than the opportunity, the investment opportunity. Maybe it's a book, right?
Right.
Maybe you wrote, or maybe it's a white paper on the real estate market in your area, or it's something. It's not the investment opportunity, right? It's something else that
Right.
you're using as a loss leader, as a hook to try to capture people that are interested potentially to become an investor. Not necessarily, but obviously, you get them, you get a funnel of people that are interested in your content. And then from that bucket, then you can circle back on step 2 and circle back to those same people and say, hey, I understand you like our newsletter. Yeah, I understand you bought my book. I understand, and then, hey, by the way, and then because then why? You already have a relationship with those
Mhm.
people, right? And so then you could circle back on a true private placement, one-on-one level, not any kind of public advertising now,
Yeah.
because now you have a relationship. You can reach out to them one-on-one and say, "Hey, Dave, just checking in. How did you like my book?" Oh, I liked it. I didn't like this part or that part, but I liked it. Okay, well, hey, by the way, I've got a real estate deal that I'm looking for some investors. Is that something you're interested in, right? And then we can have that conversation, right? So anyway, there's lots of ways to properly market offerings. It just really, again, it depends on what kind of investors are you targeting,
Yeah.
obviously how much are you raising, and where do you and that really dictates, what types of activities are allowed or disallowed, right? So
So a lot safer in general if you just kind of focus on accredited investors and you just kind of put that front and center for your favorite four words there for accredited investors only. then
right,
then you've
right.
got a lot more freedom, uh, without going crazy, but you're a lot safer that way.
Right. And then the issue becomes, well, shoot, what if I get a bunch of non-accredited people that want to invest, right? That saw my public advertising, right? Okay,
Mhm.
well, now I've got maybe I should have maybe thought that through a little more, because if I'm really attracting your non-accredited people, again, when I say non-accredited, I mean your, lower net worth, like, they
Yeah.
have less than $1 million net worth, or they have less than 200,000 income. I mean, it's a pretty low threshold
Hmm.
when it comes to investors anyway, right? And
Yeah.
they've talked for years, SEC has talked about, oh, should we update it because of inflation and all that stuff, but nobody,
They
I'm not,
haven't. Yeah.
nobody's really pushing them to do that. So it's like, okay, well, it is what it is. That's the definition. So, um, but yeah, I mean, if you really wanted to like open it up to the masses, then there's other regulations, like regulation crowdfunding is a great example of where, you could you can have up to 2,000 small non-accredited investors putting in, $1,000 a pop.
Sounds like an absolute nightmare to me.
It can be a nightmare. I mean, obviously
Yeah.
you have to use a crowdfunding portal to do it. That's a whole nother conversation, but but some people want to, hey, open it up, for
Absolutely. Yeah.
anybody to
Yeah.
invest, right? So,
Yeah.
we have had a lot of success in doing what we call a side by side, where we'll do two offerings side by side. One is an offering for accredited investors, and they come in through this door. And then, oh, you're not accredited. Well, you come in through this door over here called regulation crowdfunding.
Okay.
And the SEC has said that's totally okay as long as they, come through the right door, right? And so
Right.
you're just basically directing
Funneling
traffic,
them whichever door
right,
makes the most
right.
sense.
So that's like, for example, the other limitation on regulation crowdfunding is that you can only raise up to 5 million every 12 months, right? Which is not a lot to do a lot of real estate deals with,
Yeah.
but on the 506C side, you've got unlimited capital. So
Right.
let's say you're raising, $50 million. Okay, I can take 45 through my accredited door, and my the other five I could take small people if I wanted to. Again, some people just say, "Oh, it's not worth it. I don't want to mess with it." Okay, well, great. Just stick with accredited, and
Yeah.
um, nothing wrong with that.
Most definitely. So, Darren, as we're kind of wrapping things up here, maybe tell us a little bit more about your book, because that's quite an
Yeah.
accomplishment. It's a lot of work goes into that. So, tell us about it.
Yeah, I've been wanting to do it for a while. I have a YouTube channel that I jump on from time to time, just talking about different things. And I found over the years that I see keep getting the same questions, a lot of the same issues. Again, whether it's 2008 or
Yeah.
2026, I mean, it's same issues apply. So this book, Raising Capital with Confidence, is kind of a um, I said, well, I want to just write something that kind of covers all the basic groundwork, right? So, if you read this book, even if you kind of skim it, at least you have a good idea of the playing field, right?
Mhm.
And what are all the options and all of that. And so I I kind of wrote it just to kind of for that reason. But then I find even existing clients that have been with me for years, they're buying it. And I'm like, well, you
Yeah.
should know all this already, right? You've been doing this for a while. And they're like, well, no, it's helpful to sort of, I know you told me 1,000
You
times,
you
but
you know it all, but yeah, it's hard for
yeah,
everybody
it's
else to
like,
remember
well,
that
you know,
stuff.
you told me a million times, but now that I see it in kind of black and white, and it's not a long read. I mean, you could knock this out on a weekend, you know.
Yeah.
But or as a reference, right? Like, oh yeah, Darin talked about, debt offerings versus equity offerings, and okay, it's not meant to be a treatise, of the whole, but just kind of a high level overview of all the different things to be to again, whether you have me be your securities attorney or not, it's a good overview, I think, and so I've been happy with how it's been received. So yeah,
Wonderful.
yeah.
So, Darin, if people want to connect with you or find out more about the book, where should they go? What should they do?
Yeah, my law firm main website is mangum.law. That's like a man chewing on gum, Mangum at just .law. If you go to mangum.com, it's a cousin of mine who's like a personal injury lawyer
Okay.
down in Arizona.
Darn
I'm
it.
like,
He,
well,
he got the .com first.
yeah, he got the .com and didn't want to give it over to me. I think he's in his 80s now, so I might get it sooner or later. But yeah, mangum.law is the main website, and yeah, there's a link there that I think I offer a couple free excerpts from the book on the website, and also there's a link to you can find it on Amazon, obviously, and I've actually got an audio version coming out hopefully soon. We recorded it, but it'll be available as an audiobook as well. But and also you can connect with me on LinkedIn, sure, for sure. So. But yeah, yeah, I'd love to connect with anybody that wants to explore, their offering and what they're doing.
Yeah, perfect. So there you have it. Darin, thank you very much for being on the show and congratulations on the book.
Thanks, Dave, for having me.
All right, everybody, take care and we will see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.